Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon. My name is Michael Cerami, and welcome to this Thursday, April 25th, 2024 edition of the AICPA Town Hall. It's been 3 weeks since our last broadcast, and there's lots happening. As usual, we have a very full agenda with a great lineup of speakers for you. So let's go ahead and dive right in, and please join me. I'd like to welcome in our first speaker, Rachel Dressen. Rachel is with the AICPA's Congressional and Political Affairs team down in Washington, D.C. And Rachel, it's great to have you back with us today.
Great, thank you. It's good to be with you.
So, like I said, Rachel, it's been a few weeks since we've addressed the town hall community, and I know there's been a fair amount of activity down in Washington since then. So, what's the current state of affairs?
Yeah, it has been a busy 3 weeks here in DC. So there were a couple of major must-pass bills that were hanging over Congress's head that they wanted to get passed and signed into law, and they actually did it. So one of the bills was the Foreign Intelligence Surveillance Act, FISA, which that's a bill that was passed in the late 1970s that gives the intelligence agencies authority for combating terrorism here in the US. And then the other bill was the supplemental funding for Ukraine, Israel, and Taiwan. So those were the two big must-pass bills. And they were passed by the House and the Senate, and now are on the president's desk for him to sign. So it's important for us. We follow all the must-pass bills because they are vehicles for legislation for other things. So the two biggest bills have passed. There are, maybe a couple of smaller ones that they might get to, but really looking forward from now until the election, it's really messaging bills that we think that they're going to be working on, as well as trying to get through appropriations, which we think that it's probably a very, very difficult task for them to actually get these appropriations bills signed into law before October 1st. I don't know if really too many people who think that will actually happen, but they're going to work through that process. And by working through that process, there'll be a lot of amendments that will be offered. So we will be following all of the messaging bills that might not make it to law before the election, and also any amendments that could be offered to appropriations bills, because they could impact the profession. You think about things related to the SEC, PCOB, IRS, those could all be bills that they could consider and get a recorded vote on. So we are not taking a break, even though there might not be some big, healthcare reform type of bill that gets signed into law before then. There'll still be a lot of activity going on.
Well, I know you guys do a great job of tracking all this stuff, Rachel, and trying to stay out and ahead of it. And I know we do our best to make sure that we bring it to the town hall community as soon as it kind of gets on your radar. So we'll continue to keep folks updated. In the meantime, I know there was some activity regarding artificial intelligence and some steps taken in that regard.
Yeah, so AI is like the new hot topic here in Congress. There have been over 175 bills that mention AI in some form, and over 80 amendments that have been offered, and dozens of hearings on AI. There are questions around, intellectual property, or questions around national security, election security, workforce displacement, bias, all sorts of things like that. And there really isn't one committee that has jurisdiction over AI because it is so encompassing. But legislation was introduced in the Senate just last week on AI and focused really on giving NIST the authority to come up with some standards. So that's the focus of the legislation. And those who introduced the bill are all members of the Senate Commerce Committee. And just, for us, we are tracking this very closely because the NIST standards will really be focused for companies and for companies implementing AI, but CPAs will be working with their clients on all of this. So it's something that we're following.
Well, and it's particularly interesting just seeing the quote from Senator Hickenlooper, kind of using, I guess, the audit of financial statements as kind of a benchmark for, I guess, how they're long-term looking to view the audit of AI. And I know that's something that you and the team are leaning into with them and providing a lot of education around. So maybe comment on that a little bit.
Yeah, so there is an interest in passing some sort of legislation that would include some sort of an AI audit, similar to like what you said, to that CPAs do for financial statements. We're having early conversations with staff on this and the role that CPAs will play in all of this, but also it's a lot of educating staff on the difference between audit and attest, because they don't necessarily know the difference. And as you know and can imagine, that language is very important in legislation, and the difference of one word could make a huge difference. So we're doing a lot of educating staff on what CPAs do and the difference between audit and attest.
Great. Well, let's go ahead and move over to beneficial ownership. So BOI, I know there's some things starting to percolate there that you wanted to spend some time talking about.
Yeah, so this is new for the town hall. So there's legislation that is in draft form right now, and it's really to help small businesses to navigate through all the different things that you have to do in being compliant with the BOI requirements. And one of the provisions in here is to provide liability safe harbors for CPAs who are doing this type of work. And so this is something that we're excited to see. The bill has not been introduced yet, but we are, having conversations on the Hill. The Congress is in recess this week, but they'll be coming back in for 4 weeks. So there's potential that this legislation could get introduced over the next 4 weeks. And I know Melanie will talk a little bit more about BOI and some of the regulatory aspects of this, but this is just some exciting draft legislation that we're seeing in DC right now.
Yeah, this is really encouraging. I mean, as you well know, this has been a, hot topic is probably an understatement in the town halls recently where all this falls out. So seeing this come to light, I'm sure a lot of people are appreciating seeing this made much more clear. So this is really great news to be able to report on. And then over at the FTC, I know there was a rule, final rule that was passed or approved yesterday or voted on, and frankly, a lot of discussion around the networks, the last couple of days. So maybe you could take us through that.
Yeah, this is breaking news from just this week that the FTC came out with the ruling on the final rule on this non-compete agreement. They had come out with the proposed rule a little over a year ago. And if you remember President Biden's State of the Union address last year, he actually mentioned this, and his concern was those working in a fast food restaurant not being able to work at another fast food restaurant across the street. So they came out with a proposed rule back in January of last year, and they had a comment period that received over 26,000 comments. And just to put that into perspective, that's a lot of comments for any proposed rule. And they finally came out with the final and voted on it. It was a partisan vote. 3 voted in favor of it and 2 against it. And what this would essentially do is it would ban any new non-compete agreement, and any existing non-compete agreement, the business would have to inform their employees that those agreements are no longer enforceable. There is an exemption in this for senior executives, And they define a senior executive as someone who makes over $151,000 and is in a policy-making position. So that is the exemption in this. So this is, the new rule that has come out just this week, and it will go into effect 120 days after it's printed in the Federal Register. It takes, give or take about a week or so for a rule to make it into the Federal Register. So if that gives you a little sense of the timing that we expect this to become in effect.
Right. So the timing would be, I guess, August-ish timeframe. But there's a lot of pushback on this. I know that, both companies and individuals have filed suit against it. So maybe give us a little bit of that perspective.
Yeah, and we expected this back when it was just a proposed rule. We knew that if they ever did come out with a final rule, there would be lawsuits that would be filed immediately. And like you said already, some lawsuits have been filed on this, and they're really based upon whether or not the FTC has the authority to be coming out with this rule, as well as questions around the major questions doctrine, which is that this has such a significant impact, given that, according to the FTC, this would impact 30 million people, that the FTC just doesn't have the authority to do that. So I think this is something that could actually make it to the Supreme Court. So this isn't over quite yet, and we'll be following all of that and updating the town hall community on whatever is decided in the courts on this new rule.
Yeah, I know the U.S. Chamber of Commerce was one of those organizations that either filed or, said filing is, coming, a lawsuit is forthcoming. So it should be interesting to see where this goes over the next couple of months. And like you said, we'll do our best to keep everybody updated. And again, the tax bill update, something we've been tracking really all through tax season, and now we're beyond, April 15th. And so maybe an update on how things are kind of shaking out related to the Wyden-Smith bill.
Yeah, so we've been updating everyone on this. And like you said, we made it past April 15th. But really, things haven't changed over the past 3 weeks since the last town hall on this. There still isn't the 60 votes necessary in the Senate to get this signed into law. The question is, if the Senate does amend the bill, then the House would then have to take it up, which would then make it really difficult for the House to pass any amended version of it. And as you know, with each passing day, as we get closer to the election, it makes it a lot harder for this bill to make it through. There's always a chance that Senator Schumer, who is the majority leader in the Senate, could just put this on the Senate floor for a vote, just to get everyone on record on where they stand on it. But again, at this point where we sit today, it just doesn't have the 60 votes to make it through the Senate and then to get to the president's desk. But we're following this all very closely, just because this does have an impact on 2025. Because if they do pass this bill, it is kind of what we would call a down payment on tax legislation for next year, which is when Congress, we know, will be addressing tax legislation as far as the expiring provisions from TCJA. They all expire next year. So we know that there will be a tax bill then. So this could be kind of viewed as a down payment towards that. So that's really important. Or, if this doesn't pass, there is always a possibility that the ERC provision could get taken out of it and just passed on its own as a standalone bill. So we're following it for those reasons. But and you said, they're looking forward to 2025. It's also a little bit telling where Congress is in viewing the likelihood of this, given that Chairman Smith, he has just announced yesterday that he is creating what they're calling tax teams, which are 10 teams on, different issues like manufacturing, working families, things like global competitiveness, and they're all just taking a look at provisions from TCJA that are expiring that they want to be prepared to address at the beginning of next year. And in the Senate, they're having staff briefings on hot topics from TCJA, like 199A. So they're already starting to prepare for what they know is coming. And so we're having a lot of conversations with people on the Hill on, what they're thinking and, what we think, sharing, our thoughts on different things, but also, what the plans are moving forward. A tax bill doesn't have to be paid for, but we think that they will probably likely want it to be revenue neutral. So that's something we're also keeping in mind is just, whatever pay-fors they decide to use for whatever they come up with in 2025. And they're having those conversations now.
Yeah, so that's a great update on that tax bill. It clearly seems like all eyes on 25, really gearing up for something to happen then. And clearly this is something we're going to follow very, very closely. So great stuff, Rachel. Great update. Thank you for being back with us here today. We'll invite you to come back on for open forum. We have a bunch of questions, I'm sure. But thanks for being with us here today. We'll talk to you in a bit.
Great, thanks.
Great. So now I'd like to go ahead and welcome in for our technical update, Melanie Lauridsen. Hello, Melanie. Hi, Melanie.
Well, I'm happy to be back.
Great to have you back, Melanie. Melanie is our VP for Tax Policy and Advocacy. And like Rachel, she's got a lot on her plate and a lot to update us on. So, Melanie, I'll go ahead and invite you to take us through what you're here to talk about.
Sure. But let me go ahead and start by congratulating those that are in tax for wrapping up another filing season. Busy season really is a feat, and getting through that finish line is really hard and impressive. So the IRS has already chimed in as to how they perceive the filing season went. So from their perspective, they delivered a very strong 2024 filing season. So they expanded services for millions of people on the phones, in person, and online. And they also said that thanks to the Inflation Reduction Act funding, that the IRS increased taxpayer service levels to those not seen in over a decade. So all this is a continued great step in the right direction. And on this slide, you'll see some of the stats that they went over and they released. So most notably, according to the IRS, they reached an 88% level of service on their phone lines, which is an increase from the prior year of 84% level of service at the same time last year. Now, they also answered over 1 million more calls this year with shorter wait times. And the IRS also saw 75 more million IRS.gov visits, which were fueled mainly by the new and expanded Where's My Refund tool. Now, we also heard from our members that they felt that they were doing less refund returns this year. And actually, the IRS statistics show that the number of refunds went down about 1.5%. Now, which that doesn't seem like a big number, but that 1.5% is over 1.2 million less returns that didn't claim a refund. And of course, the average refund also increased to $2,948. Now, I was personally pleased to hear that Commissioner Werfel said that these numbers illustrate the strength of this year's filing season, but the IRS needs to continue working hard to make more improvements and continue transforming to serve taxpayers, not just through the April tax deadline, but throughout the year and into the future. Now, the IRS expects there to be approximately 19 million returns filed on extension, which is really critically important to us that services continue into October and not just stop in April. However, I do need to caution that the IRS's numbers are a snapshot of a moment in time. So for example, those level of service percentages, those only capture a limited number of phone calls. And within those limited phone lines, it's a subset of those callers. So take that 84% level of service for last year. When looked at the entire year, looking at all the calls the IRS received, they only answered 34% of all calls. So each year, we deploy our own survey immediately after the filing season on how the IRS performed from our members' perspective. So on this slide, you see that QR code, and right next to it, the words that say AICPA IRS Service Survey. That's the link to our survey. And I really do encourage anyone that is in tax or had any interaction with the IRS to please complete this survey. Oftentimes our results, they align with Aaron Collins' annual report to Congress on how the IRS did, which is a look back for the entire year and how it really shows the real numbers versus that 88%. Additionally, our survey really helps us to better understand and serve your needs for future tax seasons. And also it enhances our advocacy efforts and it drives our future engagements with the IRS. So if you're interactive with the IRS this filing season, I really ask you to take those 5 minutes to complete that survey. That survey closes on Wednesday, May 1st. So please take that moment to file that or to complete that survey. On to the next slide. As part of the IRS's efforts to continue combating identity theft and protecting taxpayers' personal information, the IRS did make changes that impact how tax professionals receive transcripts. And I know we've heard from some of you, but please keep it in perspective that they're doing to combat identity theft. So as of April 1st, tax professionals have to call the Practitioner Priority Service Line, the PPS line, to request transcripts that then get deposited into their secure object repository, which is the SOR. Now, while the PPS line has been the primary source for these requests, the other 800 IRS toll-free lines, they will no longer be offering the SOR as a delivery method. Additionally, tax pros will need to pass the current required authentication, and they're also going to have to verify their short ID. So for those of you that haven't established an IRS account, the short ID is a unique alphanumeric code that is systemically assigned when you establish an IRS account. And if you don't know what your short ID is, you can see it when you log into your eServices SOR, and that's where that number will be. Now, unfortunately, if you can't verify your identification, the transcripts, they will only be mailed to the taxpayer's address of record. They won't be sent to you. And this doesn't have anything to do with the ID.me process, and PPS assisters, they can't resolve it through the ID.me identity proofing or the status of the ID.me account. If you do have any questions, there is a link on this page that takes you to the IRS website for a deeper dive into that. Now moving on to ERC. And I did see some questions coming in. So despite the ERC moratorium, the IRS is still getting about 20,000 ERC claims weekly. And the IRS Commissioner Warfel told Senate Finance Committee on April 16th that tax bill, the one that Rachel was touching base on, the retroactivity for ERC, that he would like to see it because it would help the IRS combat ERC fraud claims. Now, he specifically said there are two things being harmed if that bill doesn't get passed. One, the financial bottom line of the US government, and two, it's our big inventory of claims. There are still eligible claims in the midst, but they're very hard to find. It's like finding a needle in a haystack. Now, I've heard that keeping the ERC claims open is costing approximately $3 billion per week. So that gives you a little bit of perspective as to why some people would be interested in stripping that piece of the provision from the bill and having it as a standalone bill. Now, as a recap, I saw a lot of questions coming in of what's happening with the moratorium, the voluntary disclosure program, and the withdrawal program. So the moratorium, again, it was a temporary stop of processing ERC claims, which happened after September 14th. Now, as of right now, there is no firm end date, and possibly we've heard that it might end in late spring. But as of right now, there is no end date, and they're still not reviewing a lot of those claims. The IRS did find that more than 12,000 entities filed over 22,000 claims that were improper, which resulted in $572 million in assessments. Then there's the voluntary disclosure program, which that's where employers who filed an ERC claim in error, they were able to voluntarily pay back 80%. That program ended on March 22nd. Now, we've heard that it may reopen in the future, but we've also heard that taxpayers should not expect a better deal than that 80% payback. Now, the preliminary results of that program is showing that the IRS recovered $225 million from over 500 taxpayers. And through that program, they still have over 800 plus submissions to still be processed. Now, the withdrawal program, that's where if an employer filed an ERC claim in error and they didn't receive the refund or they didn't cash in that check, they can go in and withdraw that claim. That program is still open. And so far, our understanding is that have been 1,800 entities that withdrew $251 million in ERC claims. So again, as you can tell here, there's a lot of erroneous ERC claims and a lot of money at stake. Again, there's a link to our resources if you need more information, history, advocacy. Click on that link and that'll take you to a lot more information with that. Okay. ERC scams. So sadly, the IRS's Dirty Dozen list, it keeps identifying new IRS scams. Now, while tax season did conclude, tax practitioners still need to remain vigilant as to those phishing scams because they do continue to surge. Most recently, scammers are impersonating the IRS via notifications that claim tax filings were rejected by the agency. Now, it's critical that you remember that the IRS never initiates contact by email, text, or social media. Now, you have to also be mindful to not click any of these links if it's coming from a questionable source, kind of a little bit sketchy. However, on the other side, please be aware that the IRS has started to include QR codes in their notices. And so to be clear, QR codes are now in notices, and it does not mean it's a scam. So please be on those lookout for those QR codes. Now, specifically, the IRS redesigned Notice 5071C and sent it to over 60,000 taxpayers to test those QR codes and see how taxpayers are responding to it. If you do come across a scam, please report it to the IRS at phishing@irs.gov. Okay, so we're going to wrap up the IRS tax updates, and I'm going to go through a round robin of topics that might be of interest to you. I'm just going to touch on them briefly. Please note that there are links to each of the topics so that you can get more information and take a deeper dive. So, the IRS recently released the draft Form 1099-DA, which is digital assets proceeds from broker transactions, which will be submitted by the digital assets brokers to their customers and the IRS starting this January. Now, the Form 1099-DA will report information on the sale or disposition of digital assets. Next, certain required minimum distributions were provided relief through Notice 2024-35. The notice says that if certain requirements are met, a plan won't fail to be qualified for failing to make a specified required minimum distribution in 2024. They also said that taxpayers won't be assessed an excise tax for failing to take that required minimum distribution. The notice also indicates that final regulations are planned for release in 2025. Moving on, for corporate AMT taxpayers, they were provided a limited relief from penalties for failure to pay estimated income for the 2024 first quarterly installment of estimated income tax that is due on or before April 15, and for those with taxable years beginning in February 2024, May 15, 2024. Also, Treasury and the IRS issued new proposed regulations that provide taxpayers and tax professionals with new guidance concerning that 1% excise tax owed on corporate stock repurchases. And finally, the IRS released frequently asked questions to provide guidance related to the new previously owned and qualified commercial clean vehicle credits And the agency also updated FAQs to address the federal income tax treatment of amounts paid for the purchase of energy efficient property and improvements. Whew, that was a mouthful, I feel like. So moving on, BOI. Okay, for those of you who haven't been following BOI, this first slide has a summary of what BOI is and what they're requiring for the new entities. For those that have been following BOI, this is just a nice summary slide for you guys. Now, since BOI is new this year, it is constantly evolving. And this Friday, FinCEN actually released new FAQs. They had one question, so if we could jump to the next slide. They had one question regarding if business entities weren't formed by the state secretary, did they need to then file a BOI form? And the response was no, they don't. That an entity that was created or registered through the state secretary, then they needed to file the BOI form, unless, of course, they meet the 23 exemptions. Now, a lot of the FAQs were based around HOAs and trusts. Now, I do get a lot of questions regarding HOAs. There's a lot of confusion since the HOAs are generally set up to be not-for-profit and they believe they are exempt from the filing. But here's the thing, most HOAs, they need to file unless they qualify as being tax exempt. So in other words, if they're a social welfare organization, which most HOAs, they aren't exempt, and most HOAs also won't qualify for the other 23 exemptions. So again, most HOAs will need to file. Now, with an HOA, there usually isn't a 25% owner. So who exactly is a beneficial owner? Well, FinCEN provided clarity on that. And even though, again, there's no 25% owner usually, there is usually a senior officer, someone who has authority to remove certain other officers or make important major decisions, or somebody who has substantial control. So they would be considered the beneficial owner. With trusts, FinCEN made it very clear that beneficial owners can own or control a reporting entity through trusts. Now, who would a beneficial owner be in these scenarios? It would be a trustee that has the authority to dispose of trust assets. It could be a beneficiary who's the sole recipient, or the person who can demand a substantial distribution of the assets. It could also be a grantor that has the right to revoke the trust or can also withdraw the assets from that trust. The thing about trusts is trusts are set up for specific needs and for individual purposes. So because of that, FinCEN couldn't quite define every single scenario that could define a beneficial owner. So they kind of left this open-ended, other facts and circumstances may apply. So it does need to be looked at on a case-by-case basis. FinCEN also touched base on penalties. So they did have a question on that and associated with willfully not filing. What I personally find interesting is that willfulness is one of those things that has a gray area. And when I was involved in a conversation with FinCEN at the IRS, they actually stated that willfulness was a state of mind and that business owners really just needed to adopt this willful state of being, and that it was simply part of being a business owner. Now, I've said this before, I really struggle with penalties associated with a concept that has a lot of gray area and determination and what willful means. But anyhow, on this slide, there is a link to FinCEN's FAQs if you want to see all the new FAQs, if you want to take a deeper dive into HOAs or trusts. And the questions on FinCEN's slides, they're also dated so you know which ones are the most recent. Also, another topic that FinCEN focused on in the FAQs has to do with how they plan to give access to BOI information from agencies that have requested it. So I'm not going to dive into this, but this slide is just a really good reference point so that you can see and how things move forward. So finally, well, not quite finally, I'm also happy to say that our advocacy efforts are receiving attention and are being heard. You heard Rachel talk about the potential for legislative proposals that are being introduced. That's great news. Well, next week, the House committee is having a hearing on this, and it's called Under the Microscope, Examining FinCEN's Implementation of the Corporate Transparency Act. Now, Though we won't be a witness at the hearing, we're working very closely with one of the stakeholders who has been with us since the very inception, and they look to us as thought leaders. So they will be proposing our recommendations. And I saw some questions coming in here in the chat regarding, are we still advocating for a suspension? Yes, we still are advocating for a suspension. We're also advocating for other pieces of provisions that would help. So instead of this 30-day filing reporting requirement, just builds it into an annual basis. And that's what will be presented at this hearing. And we also know that the stakeholder will be sharing our members' pain points and what their clients are going through with this reporting requirement. So now, finally, to wrap up, Vincent, it's an important reminder, we have lots of great resources available in BOI. I also saw some questions coming in. Where can they get a link about this? Just go through our webpage, find the links. There is a sample form there. Lots of great information. And with that, Michael, I turn it back over to you.
Wow, great job, Melanie. Lots of information there, lots of appreciation from the online community for how you made that digestible. I think one comment, I think BOI is getting increasingly complex. So I think this information is really helpful. Hey, Melanie, one thing I did want to call out is I not to anybody's surprise, but there's probably a lot of people who had differing opinions to some of the IRS data that we shared. And so I think that just begs the question to go ahead and encourage everybody to make sure they take the AICPA survey, because if they had a different experience this filing season, we clearly want to know that, right?
Absolutely. And that's why it's critical that people do take the survey. I can't stress enough. I can't beg people enough to take the survey. It means a lot to us. And I always find it fascinating. We're always in line with Aaron Collins' report at the end of the year when they take a really deep dive as to what the IRS did and how they did it.
Great. Well, great job, Melanie. We'll have you back in just a moment for open forum, but thank you for taking us through all that. So with that, I'd like to go ahead and welcome in our next speaker, Ai-Ling Lee. Hi, Ai-Ling. Welcome.
Hi, Michael.
It's great to have you with us. Ai-Ling is with our partner, Robert Half. She's a VP in the field practice office. So I know you're working very closely with recruiters all across the country who are helping fill positions in accounting and finance. So I would probably an understatement to say you have your finger on the pulse of just what are some of the latest hiring trends and maybe even more importantly, strategies for accounting and finance professionals to kind of retain and recruit top talent. So I think, Ai-Ling, you're here with us today to share a little bit about some current and very relevant data that your team has kind of assembled in one of your latest surveys. And we're going to talk a little bit about, hiring strategies and practices, hiring and retention and recruitment strategies and practice. So excited to kind of jump in, but let me go ahead and invite you into the conversation.
Thank you, Michael. It's great to be here. And the common theme today will be market trends, what's happening with job growth, what candidates and employees are really looking for. So there might be some themes that pop up, through each slide. But, I'll also be covering some key takeaways resulting from a report that's been put out by Robert Half called the Demand for Skilled Talent. And it's a biannual report. So some of the stats we'll be covering today are going to be a result of the survey from the end of 2023. Long story short, about 1,300 respondents. A lot of the stats will be specific to accounting and finance. We also have an independent third-party research firm putting all the data together for us. So, you'll see from the slide, we're already talking about unemployment rates, job growth, and what's driving much of the job growth will be some of the topics we'll cover. We'll also talk about some of the common challenges that companies are facing hiring in this market. Also, common mistakes and how to avoid them if you're currently in the position of hiring or having to hire this year. But it's a funny time. We're seeing some very strange things happening that we haven't seen before. It's the 39th consecutive month of continuous job growth. So, hopefully today the takeaways will be helpful for those of you on the call listening and hoping to walk away with some more credible and tangible data to empower you in your choices in hiring. So
Wonderful.
yeah, not a problem. So really right now we're seeing that companies are hiring. Last year, we definitely saw a bit of a slowdown. And with a lot of the growth that we're seeing in the jobs, this isn't being matched by growth in available talent. If anything, we're seeing that only 27% of workers from finance and accounting plan to look for jobs for the next 6 months. That's down from 47% in July of last year. So, as we're seeing highly skilled professionals and the demand for highly skilled professionals increase, especially in accounting and finance, there's this growing shortage of available talent, ready and available to find a job this year. What's interesting was last year, because there was a bit of a slowdown in hiring, there's some pent-up demand. And that pent-up demand is going to be executed this year, or that's the plan, at least from the survey. We spoke to other companies and they said that they're going to be, carrying on from some of the hires that they had paused last year. And so what you might have heard about the big resignation in 2020, 2021, and then follow that was the big reshuffle. I think, Michael, we were talking about this before the call. These terms are kind of catchy. And then now we're in this, what we're calling it, the big stay. So we'll talk a little bit about that, in the following slides.
Great. Well, yeah, and I know. We can come back to some of the data, but I think you're spot on. I know, the labor market is kind of the third leg of the stool. We're monitoring closely what's happening with inflation. Seems to, be inching up again. Maybe not as big of a clip. We had the GDP numbers come out today, and growth is slowing. But the labor market, based on your data, but based on everything else we hear, continues to be pretty tight. So it's interesting, and I love how you guys put it in the cycles, right? The Great Resignation kind of coming out of or in COVID, throughout of COVID, then the great reshuffling. I'm still not sure I fully understand that. You can elaborate on that one a little bit more. But then in this kind of current cycle we're in, where people seem to be very judicious about making moves. So that doesn't mean they're not moving, but they're making very informed decisions and are moving for the right reasons. But maybe before we even get into that, Ai-ling, in the next slide, you could talk a little bit. I know part of what you guys surveyed was what is top of mind for most accounting and finance executives, and kind of their key strategic priorities for 2024.
Yeah, as a result of the survey, you'll see on this slide the top 5 top of mind strategic priorities for this year. And as you scan through these topics, you'll see that so much of this is centered around themes and common themes such as change management, efficiency, productivity. And think about, none of this can be executed without the right talent, without the right leaders. And if these are the most crucial parts of business decisions this year, then it's the people driving it that's going to be really affecting the success. And having the right people in place is really top of mind, and having the wrong people in place can also be, problematic. So really, when you think about these strategic priorities, and, we already heard about some AI and implementation of change, it is packaged around this common theme of, do you have the right people executing on these very important business decisions?
Right. So you got a tight market, you got these very complex strategic priorities that are very critical of the business. And then, like you said, just the first 6 months of the year, I think this backs up kind of what you were saying, that your first point about, I guess hiring companies are facing challenges, finding skilled talent to be able to execute on those strategies. And then maybe take us through these couple of other data points on vacated roles and new roles.
Yeah, absolutely. So what we're looking at here are, this first 6 months, what is actually happening and what managers and hiring managers are experiencing. And so you'll see that, first of all, outside of just the challenges we'll talk about, managers are having to balance the nuance of hiring permanent staff and contract staff. And that's already in itself a challenge because you're factoring in different focus points like urgency and continuity if you're hiring for seasonal or project work, especially if it's delayed projects from last year. Then on the other hand, you're thinking permanent hiring for long-term growth, for long-term change, and looking at a bigger scope of matching needs, who this person is now versus three years from now. So that in itself is not easy. And then when you add in the culture, the challenges of not just finding the right people or the right skills or the right personality, it's, do we have the right offer? Are we meeting the candidate's expectations? And we have this increased competition of people trying to hire the same people for their roles. So there's just a lot, right? And then you've got the concept of retention. And while people are staying, there's still attrition that companies have to factor in. And at the same time, you've just got this holding back from employees and candidates that are not actively changing their roles like they were a few years ago. So, this slide, again, speaks to that point where fewer finance and accounting professionals are currently in the market. So supply just isn't matching up with the demand. In fact, in many cases, it's the opposite.
Yeah. I mean, it's a pretty big, you mentioned earlier that 27% of accounting and finance employees are, seeking new jobs, which is a pretty steep drop off from a year ago, 41%. So clearly to your point about people staying put and it doesn't mean they're not moving, but being, again, much more particular about what they do. And then I think, you started to get in maybe some strategies that for kind of moving past the hiring indecision. Maybe take us through some of these thoughts.
Yeah. And this is just what our consultants are educating our clients on every single day. What we're seeing is that employers are more cautious. We also know that there's a risk involved in leaving a critical role open, or there's a cost of hiring the wrong person for that critical role, as we spoke to. But our data is showing that, the three avoidable mistakes are around not having the right solution to your need, whether it's a project or a contract role versus something that's more permanent in nature, not necessarily having enough people. Delaying the hire just creates a bigger burden on your existing team, and there's a water flow effect on that. And then the biggest one for me is just like the delay, whether it's through extra processes or taking too long in between steps. But what we're seeing is that the timing and the urgency and the stages of hiring where companies are slowing things down, that's where the most increased risk and the pitfalls we're seeing, because it's just not matching up with the flow and the pace of what candidates and employees are seeking.
And then maybe talk a little bit about, Ai-ling, just some of the, the reasons that the top talent, is slipping away from some of these organizations.
Yeah. Yeah, from our survey, last year we saw that almost every hiring manager lost out successfully on their top choice because of one of these three reasons: not being able to meet the expectations of the candidate, not being able to move fast enough, and also not being able to offer enough flexibility. These are the three big themes. And so in light of this, this is just what we continue to educate companies that are invested in hiring on, which is be competitive with your offer, be competitive with flexibility, and, do not delay in making that strong offer, because, the third one of taking too long is definitely something that you have control over.
Sure. And what are workers telling you, or at least through the survey, that they want most? There are some interesting data points here.
Yeah. And at this point, I don't know if this is surprising to many people still, but definitely you see that, to find and keep your people, you have to know what they truly want. And these are the results from the survey. Compensation and salary is still a big part of what drives people to move or stay. Benefits and perks absolutely are a part of that. Flexibility is definitely what we're seeing at the ground level our recruiters are just having these conversations day to day with people who are striving for better flexibility. And then, naturally, career advancement plays a big part of that as well. So these are the really big topics that I just don't see changing anytime soon.
Yeah, and these do look pretty predictable. What was interesting on this next slide, though, is as you dug deeper into some of the ideal work arrangements, fully remote still looks like it's, it wins the day, but hybrid and fully in the office, I was just surprised a little bit by just how that's balanced and weighted. Any thoughts on this?
Yeah, some of this we're seeing is based off of the sort of the multi-generational workforce that we're having in today's market. The fully remote positions have definitely ebbed and flowed in the last few years, but 4 out of 10 people still are in a position where they can ask for a fully remote role. Hybrids tend to be a very common compromise between a company and employee, and we're seeing a lot of companies and professionals balancing that out with some level of happiness and effectiveness. I think the 18%, some of that can tie into people who are newer in their careers that want that in-person experience to learn. But don't forget that in-person office 5 days a week also relies on the fact that it's a convenient and good location, commute, a good culture, good in-office perks.
Right.
So,
not alone in the office, right?
If you're a remote office in the middle of nowhere,
Right.
you don't have a lot of pull. So
Yep.
take that with a grain of salt. But the trends are still going to change, I anticipate, as the market shifts and people come up with different solutions and the technology changes.
Yeah, one question that we didn't rehearse, so maybe if you don't really have a perspective on it, it's fair. But I know a lot of this data, comes from placement into industry. And I'm sure a lot of those candidates come from public. But any context or any comments on just, maybe how this, how this is informed by the people coming out of public? I mean, do you get any raw data or at least directional qualitative data that just, maybe the public accounting perspective versus the industry perspective?
Not anything I can pull out right now that's tangible, but I will say, again, from the experience we're seeing with our recruiters, who are in the field across the US, seeing people coming straight out of public, looking for roles into private, it really varies drastically between industry, even location, and the type of roles. And so the nuance and the variance of whether a role is in office or hybrid or in person, there's just so many different variables as to what determines the need for that, whether it's a small company that they're going into and versus, a global Fortune 500 firm that has a setup to work remotely anywhere. Like technology and infrastructure play a big part. The industry that they're in play a big part.
Sure.
So, nothing I can speak to off the top of my head, but all I can say is case by case, I think where the biggest piece of information, in this slide lies is that it's still a moving and very mixed bag of preferences. So my advice is not to assume that everyone wants the same thing.
Sure. Well, thank you, Eileen. Lots of great data here. Appreciate the discussion. We'll definitely have you back in a future town hall
Thank you, Michael.
to continue to monitor these trends. Also, I just want to remind everyone that we are investing a lot in resources to help firms think about attracting and retaining talent. Here are 3 resources, all available to everyone on the town hall podcast, webinar, video, that all really talk about linking recruitment, retention to the right type of culture. So please do take advantage of them. And with that, I'll invite our panelists back up for a little bit of discussion and a quick Q&A. And I wanted to bring in some questions. Melanie, maybe we can start with you.
Sure.
On the transcripting question that you hit earlier, can you still get transcripts through eService and/or TaxPro account?
Online through e-services, you should still be able to do that. Yes.
Okay, great. And how about if a company closes down, do they still need to notify BOI of a change? I don't know if these are too tech, in the
No,
weeds.
so I get that question quite a bit. And here's the thing, and I saw other questions related to BOI too. BOI is still new. It's in its inception year. Okay. And so a lot of the questions that people ask, we just don't have answers, and we're still looking for clarity. As far as an entity that dissolves, it depends on how it dissolves, when it dissolves, if it was in formation, if it has to do with the number of employees, if it has to do for various reasons. And so what I tell people is that small entity compliance guide that FinCEN has put out, really take a look at that. That's the best source of information, and there are checklists there for entities that are dissolving too.
Great, thanks, Melanie. Rachel, earlier you made reference to a kind of messaging bills. A couple of folks asked if maybe you could elaborate on what that is really from an advocacy standpoint.
Yeah, so we call them messaging bills. They're bills that we know won't get signed into law. An example of this is a CRA, which CRA stands for Congressional Review Act. So a CRA has been introduced in both the House and the Senate on the SEC's new climate rule. And what this would essentially do is it allows Congress to overturn agency rules. So these CRAs would overturn the SEC's climate rule. We know that President Biden is not going to sign into law something that overturns this. But this does put members on record on where they are on this new rule. So that's just an example of a type of a messaging bill.
Great. Thanks, Rachel. And Eileen, we have a question for you, but I'm afraid it's going to take too long to answer in the amount of time we have. So, but do we maybe just, I'll ask it in the context of a resource or resources, folks just asking maybe leading best practices that we or might be able to make available with Robert Half that kind of provide solutions to a lot of the challenges that you maybe highlighted in some of your slides.
Yeah. Oh, well, I welcome you all to take a deeper dive to the report. I think it does a much better job of summarizing the points. And I think just in this market, knowing that will already better inform you. So if the link will be provided after the report, the call is finished.
Yep.
I just think that it's worth everybody taking a quick look and referencing the areas that interest them.
Well, wonderful. Well, thank you, all three of you. Great review of the content. It's always hard when we have that third week off because there's a lot of content to cover, and you all did it quite admirably in the short amount of time that we have here today. But thank you all for being here with us today. So real quick, couple of final updates. So we have open right now the PCPS CPA Firm Top Issue Survey. I'm channeling my best Lisa Simpson when I say she implores you all to please take a few minutes, 10 minutes to, go ahead and visit the survey. It's open until May 17th. So Lisa and her team really want to know about your feedback as it relates to your firm's top concerns. That QR code is an active code, so you can just go ahead and kind of take a picture of that and it'll take you to the survey. It is no more than 10 minutes. And we clearly will share out the results of the survey in a future town hall. So please do take the time to go ahead and look at that. I want to remind everybody that we have some really great generative AI resources that we've just released. We've talked previously about our CPA.com generative AI toolkit. It's been out there for a while. We've got tens of thousands of downloads in that, and it's a great way to really introduce yourself to AI and the practical use cases that firms are beginning to take steps with. But just this past week, we launched a follow-up special report, which are a number of resources that, again, we've been researching and compiling throughout the course of the year. So it's just additional use cases, additional content, summaries of our discussions with AI thought leaders. So it's out now. Please go ahead and look for it. Again, free resource, lots of great information. And, Casey and her team just finished a podcast with the CTO of Sage, Aaron Harris, who's very steeped in accounting and in AI and technology, talking about how he views AI and the impact it's going to have on accounting, what the future may hold. So just 3 great resources you might want to take a few minutes to take a look at. We'll be back here on May 9th with our next AICPA Town Hall. The broader team will be back. So please do dial in on May 9th for that next Town Hall. And just a big thank you to all of you for joining us here today. Hope you have a great rest of the day.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.